Hey everyone, I'm back. It's Will. We're going to do the white paper overview for Smart Valor. So this is a decentralized securities and asset tokenization platform. There's definitely a couple other places that are doing something similar. This one differentiates out because it's got a more complex framework and it's out of Switzerland. So we're going to jump into this one here. Right now, this is the May version. I'm filming this middle of August. This is the NDA version. There will be a more publicized version coming out soon. There may be some changes, so keep in mind that this is the May version of this white paper. Something to jump out, they get a little quickie here. It's not really important for the white paper, but it does make the name make a little bit more sense that Valor in Swiss German is means security. So this is smart security, not smart valor. Like we've had a few jokes around the office of what the valor was supposed to be for. It means securities there. All right, on to the summary for this one. So Smart Valor, like I said, this is a Swiss company founded in April of last year. They're doing a decentralized global marketplace for tokenization of alternative investments. Their mission is to enable a frictionless, compliant, and secure access to these alternative digital assets and deploy these on blockchain to democratize the access to wealth. And we're going to get more into what that means here in a minute. Building on crypto-friendly regulations from the Swiss government, the Valor platform is an online investment platform with a focus on alternative investments such as cryptocurrency and utility tokens, security tokens, which is the big one for this, and traditional alternatives such as venture capital, private equity, and real estate. That's the other big one here. So all of this stuff is powered by smart contracts, no surprise there. But they have a hybrid approach on how to get to this point. They're creating a fully licensed and compliant exchange for tokenized securities and cryptocurrencies, which is a bigger deal than it sounds like at face value. And then support decentralized price discovery, trade, and settlements directly on chain, which takes a lot of guesswork out of a lot of this type of stuff. So we're going to roll on here past the contents. All right, so this is the normal part of the white paper where it's problem, landscape, and then solution. So the mission is to democratize access to best of breed finance and provide frictionless and secure access to alternative investments. So what they're talking about is things like venture capital and private equity. That right now, that's stuff that you need to have a big bankroll before you can even play in that pond. If you've got a couple $100,000 spare that you want to invest in something, venture capital is not an option for you. A lot of private equity firms to buy into whatever their particular interest gaining model is. Usually, you need a couple $1,000,000 US at least to play. So this is something where you can tokenize and then break down parts of those funds and make it something where everyone has access to it. And that's why that's such a big deal. So the goal is to make exclusive investment opportunities widely accessible, simple, and transparent. Where you are in the world, the extent of your wealth, and who you know should not matter. This is what they're talking about democratizing, making this fair for everyone to be involved in this portion of the financial market. So the shortcomings of the reason why, if you're not a major whale, that you can't play in that stuff right now, these are the reasons why right here. Middleman is the big one. That's on the top here. So expensive intermediaries, you know, you need a broker, you need a stock guy, you need a banker, you need an equity manager. There are a lot of people in the banking industry that make their living managing other people's money. And this isn't just somebody giving you hot stock tips. This is like an equity manager that they take a flat percent right off the top of a fund just to manage the fund, to choose what the fund's spending its money on. It's not that that's not a worthy job, but that is an expensive portion if you don't have a large enough bankroll to support that. Wealth redistribution, this one is not applicable to all countries, but it is applicable to a lot of countries. This is where a government may bail out a particular industry that you may have invested in, and they stay afloat, but your shares are worth nothing. And then later on down the road as well, the government's going to sell their shares back out of the company. They're not going to hang on to those forever like a normal investor would. And then the other addition there is inflation. Some countries are more guilty of this than others, but inflation is something that happens where you dilute the value of a currency uh, to pay off, say, a debt that you have built up as a government. And one of the easiest ways to fix that is to just print more money. But it doesn't affect everyone the same if you don't have a ton of money and you only got a little bit of, say, they call it mailbox checks, where you've got your money invested and then you just get a check in the mail. That type of stuff. If $100 used to be worth $100 and then you inflate out a currency and now it's worth $20, it's not such a great deal anymore. And then you've got inefficient infrastructure. This is mostly talking about the access to banking and stocks and stuff like that. If you're not in a developed country, it's a much larger challenge to get access to that. If you don't have high speed internet every day right at your fingertips like on a cell phone, it makes it a lot more difficult to even get your hands on dealing with a stock exchange. And then transaction settlements, all the institutional baggage that goes along with that. You need to be a part of a particular system to get access to particular funds or exchanges, and being able to even be a part of that type of stuff means you need access to at least a basic platform to access that, and that's something that not everyone has the ability to do at this time. So we're moving along with the crypto kind of rallying cry, which is it's a basic human right to have access to information and have transparent, immutable access to all information. So some countries control capital that prevents their citizens from transferring money abroad or investing in specific assets. Many countries are using inflation to solve economic issues, but the ordinary people are the ones that bear the costs. Pension reform, misappropriation of assets, this type of stuff can happen to anyone that's unfortunate enough to have it happen to them. There are safe havens, though, that if you're able to move your money out of a particular spot, that you can put it that's usually more stable. Safe havens is a bit of a misnomer. It's not that anybody can move their money there or that it's perfectly safe, but it is a lot more safe to hold money in, say, the UK or Switzerland or Hong Kong than some other countries where it may be diluted or wiped out a lot more easily. That's not an option for everybody, though. That's a privilege for some and not all. So that's where the fix here is. Initial coin offerings is, the whole idea of ICOs and cryptocurrency is something that it doesn't matter where you're at, as long as you can get access to the internet to where you can sign up for a KYC. If it's available in where you are to purchase out of that ICO, that's something that you can start investing in. And ICOs are becoming some of the most popular investment strategies right now, whether you're a small time investor or a big time investor. So the only thing that really restricts people, though, is regulatory uncertainty. There are a lot of countries, US, China, tons of countries, that everyone's still trying to wrap their brains around what cryptocurrency is and how ICOs work. There's a lot of misinformation and just misunderstanding when you get up to people that are setting regulation. And it's one of those things that's just going to take time to have them understand everything fully. But Switzerland's kind of ahead of the ball on that. Switzerland, they're calling it like the first crypto nation, is one of the sales pitches they like to use for that. But they are emerging as one of the leaders in blockchain space because of the way they're setting up their regulations. That's why you see Bancor, Cosmos. There are a ton of ICOs that they raise out of Switzerland because Switzerland is actually on top of things when it comes to regulation for ICOs. So tokenization, we're going to skip down parts of this and just hit the highlights here. Valor has chosen to focus on building a decentralized marketplace for tokenized alternative investments that will enable that democratization of access to wealth. That's what we keep harping on in this white paper, is that we've talked about what the issues are: regulations, inflation, just being difficult to navigate the financial world sometimes. And if you don't have access to the right people and the right information, it's nearly impossible to play part of that game. So Valor's trying to step in and change that a little bit. So tokenization is the representation of rights to an asset through a cryptographic token issued on a blockchain. Tokens are a frictionless way to transfer ownership of an asset. We believe this is how everything will be owned in the future. And a lot of that's because of just how blockchain works. It's an immutable, trustless way to have a ledger of transactions of what properties changed hands. So if you're talking about in the security tokens version of buying shares of a company or profits off of venture capital, whatever, if you have the tokens, then you choose to liquidate those tokens or pass ownership of that share on to someone else. You don't need a broker to put up a sell order or have somebody else have an ask out looking to buy shares of that. You can just put it up on an exchange, and if you are the person that purchases those, you now have a ledger that everyone can see that proves that you've bought those shares. You know, it works a lot more easily than, say, like a really old school bearer's bond or what you have to go through right now to buy shares off of a stock exchange. So benefits, a lot of this stuff is, and just as soon as you wrap your brain around a exchange setup for this type of thing. The major advantages, though, the record of ownership, smart contract based execution. You see this in a lot of white papers, but it just can't be understated that when you have a self executing smart contract that once the oracles are met, it executes, you get a lot of middlemen and time wasting out of the way. You don't have a secretary or an administrator or an accountant or anybody having to dig through reams of paperwork and data entry. Once it fulfills it and it sees it right off the chain, it's just done. So if you're paying out shares, you don't have to wait for the accountant to process it and then send emails back and forth and then put out an Excel sheet. It's just done at that point. Enhanced liquidity, because it's tokens can be moved on exchanges a lot more easily. This makes it a lot more easy to move, sell, and exchange, where you're not just tied up in shares. You know, you can only sell them Monday through Friday before the stock exchange closes while the stock exchange is open. Instant execution, because this is on a ledger. As soon as the node's finished up, it's in the ledger. You don't have to wait for a settlement only while the exchange is open. Fractional ownership, you can have a token, you can break that token down into even smaller pieces. It makes it a lot more accessible to a larger group of people. And that 24/7 access, again, that kind of ties in with the rest of these, that you're not stuck on a particular stock exchanges when it's open. So how something could work. This is just a quick little infograph here on like shares of a publicly traded company, how it works in current stock exchanges, and then how it could work on the Valor platform. That you have a bank, a registry, a settlement house, and then a custodian or escrow bank that's holding on to stuff. There are a lot of moving pieces here, and for a share to move from the first person to the last person in this example, you can see all those intermediaries in the middle, where if it's on a tokenized platform, you have one person sends Ethereum, someone else receives a token. This is executed by a smart contract straight off of an exchange. There are no middlemen involved, and this can happen any time of the day, every day. So securitizations, this is doing securities on a blockchain. This is something, there are a lot of white papers that are trying to tap in and figure out the regulatory minefield that's currently set up in different countries to make this legal and fair for people to jump into. But the potential is absolutely massive. So this is why exchanges and banks have started building their own private blockchains. You hear about those every once in a while in the news, that this company is working with this company to build a blockchain to keep up with this type of information. The size of the opportunity, though, for market capitalization on just domestic companies, that reached 65 trillion after a good amount of growth in the last 30 years. They got a little infograph here again. So this is just market capitalization on companies listed. So, you know, that's like, it has a Duns and Bradstreet number, not listed, like listed in a reference here. So in comparison, crypto assets, so ICOs, market capitalization of tokens, that's reached $320 billion, which is about 1% of the total equities market. You know, it was 5.6 billion last year, and that continues to grow and expand to the point where a lot of people are thinking it's going to eclipse initial public offerings, where you have a business that's a private business that then you're going to go public with the business, and that's the initial public offering. That's a lot of legalese and stuff that it takes to do an initial public offering, and it takes a long time to do, where with an ICO it's a lot more streamlined. So that's why a lot of people think that's the way of the future, is ICOs will replace IPOs. But here's the challenges on tokenization. So properties of the blockchain enable secure, immutable, consistently reliable execution of smart contracts and transactions. In dealing with real-world assets represented by tokens on the blockchain, The challenge is ensuring consistency between the physical asset and the digital token. That's the requirement that, if you're buying shares of a gold mine and you're buying off of a security token, you need to make sure that the gold mine exists, but not only that, but that it's run properly. If you're buying tokens that represent a portion of a classic car or an airplane or something like that, you need to make sure the airplane exists and that it's in working order, it's not just a picture. That's the real challenge of securities and equity tokens. So solutions for this need to incorporate technology with new business processes to make this a little bit easier. And in some cases, this is going to require new legal forms to deal with it. Clearly defined legal models need to be put in place to both protect the asset seller, so the person that's selling the boat or car, or airplane, gold mine, whatever, and the investor, so that there's not any inconsistencies of if you buy part of one gold mine, it works out great. You buy part of a second gold mine, and it's not the same, that's not a great deal. So these processes can vary between different types of investments. This isn't a exact layout like white paper of how they're going to do that legalese, just that it does need to be taken care of. The example they have here in the white paper, though, is that a number of shares issued by a certain company is recorded onto a public company registry in the country where the company is domiciled, so where the company is incorporated at or where it's homed at. As these entities move to a blockchain-based solution, change of ownership will be directly registered in the public ledger without any time lag. The first implementation cases are already in progress today. There's a company registered in Switzerland and a real estate company in Sweden. As more centralized registries for all sorts of assets move on chain in coming years, consistency between tokens and these underlying assets will become less of an issue. So it may be a legal thing, it may just be that people choose to adopt and then have network effect for particular tokens that work the way you expect them to work, and ones that try to do things a different way that's not as effective will wither. So rolling on from there, what is Valor? So again, this is an online investment platform that tokenizes alternative investments because of decentralized value creation. So Valor is doing that hybrid approach, which is the exchange for trading crypto assets and security tokens, and a decentralized price discovery and trading settlement board. So exchanges have advantages of scalability, speed, usability, and regulation, especially around security trading. However, future potential of decentralized trading is enormous, giving market participants more control and transparency. So there is a current prototype for Valor. It already contains functional smart contracts based on e-liquid assets on a consortium blockchain. Further research in this area is required to transition to a public blockchain, and this is under development as we speak. So e-liquid assets, these are hard assets that you can't just sell out. This is not cash or gold bullion or stuff like that. These are things like real estate and stuff like that. So fundamentals of the Valor platform, I'm really enjoying this white paper because it has a lot of blocked out bullet point type of stuff here. So the distinct characteristics for Valor that sets it apart from other exchange securities platforms is it's blockchain based. It focuses on alternative investments. It's a decentralized, community-driven value creation. That we're going to jump into that later in the paper here. That democratization of access to wealth, that's the big hallmark for this project. And fully compliant and licensed platform. That's the other huge part. Even just working in Switzerland, which is a forward-thinking country, being fully compliant is still a massive deal. So rolling on here, I got some infographics, some pictures here for you. If stuff's not making sense, you can take a few minutes. That's on page 9. Product focus. So what products is Valor focusing on? This should be getting pretty elementary here. So it's crypto assets such as cryptocurrencies, utility tokens, and crypto hedge funds. We can list off a couple of those in the comments if we need to, so you can take a look at what those are. Tokenization of less liquid alternative investments, such as participation in startups, young growth companies, venture capital, private equity, real estate, all that type of stuff. Those e-liquid things that you can get a piece of, but usually at this point you need to have a fairly large bankroll to jump into. And then we got some infographics. All this stuff should look really familiar to you if you keep up with cryptocurrency. This is just how the market's been rolling, the change and the spikes in the market. This is a lot of it's money talk here that, again, everybody should be pretty familiar with. But if you're first time jumping into crypto recently, there is a lot of big numbers there that can look really impressive for market capitalization. So using a new instrument called Framework for Token Confidence, they're looking to demonstrate how value can be created and how an entire economic system operates on something like a vote of confidence, which is usually where a group of people go, yes, we're confident in a government, CEO, whatever. That's a vote of confidence. It's going to delve later in the paper into how exactly that works, but basically value creation of getting people to get rewarded in tokens for doing a lot of the basic research and work that you would pay a stock expert to do for you. So the investor segment will be only consider platforms that provide fully compliant and secure ways to invest crypto assets. Therefore, they're putting their major focus on regulation and security. No surprise there. Traditional alternative investments, this is where some people have been trying to wrap their brains around this particular platform, so we're going to delve deeper into this. So alternative investments is not a stock exchange, not a CD or a savings account. So alternative investments is all that venture capital and private equity stuff. It's a rapidly expanding portion of the global market. $7 trillion of highly profitable but less liquid assets, which are not accessible to average investors. Private equity and venture capital is a huge industry which represents 1/3 of all alternative investments. That's a major portion of that. The problem with participation in private equity and venture capital funds is partner stakes. If a successful private equity firm is limited, very high investments are required to play. The other limitation is that private equity stakes are highly illiquid investments. Usually the amount that you put in is bonded and held for a certain amount of time. This is something that you do when you have more money than what you can use in a particular set of time, like a decade, but you don't want it just sitting in a bank account because you really can't. I mean, it's one of those weird things, but when you get into being a multi-millionaire, you can't just have $10 million sitting in a bank account. You might as well have it go do work for you, because you can't just leave it sitting in a checking account. It's not insured. You can't just leave it lying there. And the banks don't want you to have the ability, because if you have a checking account, they have to be able to have it on hand or produce it in short order. They want you to tie it up as well. So that's why you see that these funds are usually bonded for half a decade, a full decade, or longer, depending on the fund. So participation of these types of alternative investments on a blockchain has the potential to make these assets class more liquid and transferable. So now you don't have to bond for 10 years. And if you want to get out, you don't have to have the equity fund pay out. You can just transfer your tokenized ownership of that to someone else that wants to wait for that payout. A certain tranche or length of time of fundraising can be issued in a form of token that represents a more liquid portion of a fund. They got some examples here if that's not making sense to you, but I think that's pretty straightforward. Infographics here on how much money currently they're looking at and expecting for PE and VC. We're going to roll over that stuff. So summary on that is, through application of existing financial markets and investor protection regulations, the platform aspires to solve the problem of legitimacy and security in the crypto space by capitalizing on regulatory openings in Switzerland, building a fully licensed, compliant exchange that will give investors a secure access to crypto assets and best quality projects for those alternative investments. So the advantages of doing this over a normal VC or PE fund is that you can be secure and compliant with a new digital access to assets. So if you can't play, now this is something where you can play in that same pool, and it's still secured and compliant with all regulations. Number two is the same deal. Inaccessible investments are no more accessible to everyone, and it gives you access to safe haven investments. So if you're in one part of the world and your current economy is kind of rocky or it's volatile and you're looking for something that's more of a safe bet, you can look at assets that are being offered to be tokenized in somewhere that's a little bit more stable. If you don't want to invest in a particular country, you can invest in a different country, is what they're throwing out there. And then better access through cryptocurrency and mobile payments. By bringing capital in through Bitcoin or Ethereum or whatever token, via mobile wallets, it makes it a lot easier for people to play. You don't need that broker in the middle. You don't have to wait for an exchange to be open or for a fund manager to be in their office. The additional advantage that comes with the Valor platform is that blockchain-based platforms enable consistent, reliable, transparent, and verifiable records. That's the blockchain distributed ledger of ownership. Participants will be able to benefit from the performance of data transparency enabled by the blockchain. There's no need to trust a centralized entity, whether that's a stock exchange or a particular bank or company. The platforms run on a combination of public blockchain and a highly scalable permission solution. So for asset issuers, some of the advantages is a tokenization machine. This is something where you put in a asset and the platform spits out tokens that then you can sell. The creation of a secondary market for tokens. Once you've made that security token or profitable cryptocurrency token, now you have an exchange. That's a secondary market where you can trade and prospect, arbitrage, whatever you want to do on that, and it's open 24/7. And that it's compliant and legal. So it executes client onboarding, anti-money laundering, and know your consumer in accordance with respective regulations. Through partners, they offer a standardized setup of legal entities and structures so that they help take care of all that type of stuff. So if you have a security token you're wanting to output, you can work with Valor. You don't have to go find your own KYC company that do your KYC and AML. You don't have to hire a lawyer that knows all of the regulation laws that changed every other day sometimes. You can just use Valor and have their lawyers and companies take care of that for you. So as an asset issuer, that's a real benefit there. And then custody provisions for cryptocurrency assets. So they provide the crypto asset custody solutions and escrow services as well. So you don't have to have an escrow banker, and there's a lot of middlemen that get eliminated by using the platform here. Asset issuers that are part of the Valor platform with reoccurring issuances can become a Valor partner through holding Valor tokens, because there is a Valor token, and that is a utility token. Benefits include discounted fees, priority listing rights, and more. That's later in the paper here when we get into token economics. So for community members, apart from tokenization of assets, blockchain technology also enables the decentralization of value creation. This is one of the things I mentioned we were going to get into later in the paper. So the Valor platform, they're implementing a task marketplace where contributors can engage in decentralized value creation, such as referring an asset to be considered for listing, voting on an asset that's been suggested for listing, contributing to due diligence in collecting material data, writing an investment review, submitting performance predictions. These are all things that currently are people that work in the banking sector and get paid in fiat to do this for a particular bank. These are all things that now you can be rewarded in tokens for doing on this particular platform. The key advantage for community members is they can earn rewards for contributing their experience and creating publicly verifiable reputation. So if you jump in early, you start on this, you do a lot of good work, you can start to get a highly rated reputation for doing good work on the blockchain or the platform. So an example of how this can work out is participation in asset rating and performance predictions. An expert can submit a 12-month performance prediction for a specific asset in which he or she has specific expertise. If the prediction is right within a specific range, the smart contract will unlock and the expert will be paid. The quality of the prediction automatically builds the expert's reputation. In this way, smart contracts enable a completely independent, automated process for price discovery, reputation building, and contributing expertise to a decentralized ledger. Additional benefit to the community is that the holder of a certain minimal Valor token stake, you're eligible for voting and strategy polls, as well as launching and participating in new petitions. The number of Valor tokens you hold will be used to waive voting rights. So you have staking and voting rights also built into this utility token here. So if you want to vote for a particular change or for a particular asset to be listed or anything like that, if you hold some tokens, you get that right away to vote. The more tokens you hold, the more invested you are in the platform, the more your vote is going to matter. So we got some of their go-to-market business strategies. So these are high points they're going to hit to get to market. This is business model stuff here. Sharper focus on alternative investments and crypto market niche. Selective listings of only the highest quality early stage companies, crypto assets, and funds. So no big dogs, no lame dogs, just quick, agile, looking good projects are going to be their initial projects they're going to be listing. Application of tokenization to create a more liquid product in alternative investments. So that's your venture capital, private equity, real estate, all those things that are hard assets that are not cash or gold. Creation of next generation market infrastructure built around smart contracts and decentralized value transfer. That's the exchange. Then applying principles of token economics through distributing Valor tokens to scale the platform fast and grow a global community of experts and investors. You know, it'd be great to see people that you see talking about stocks and bonds and stuff like that in international markets. You know, whether you're watching it online or on TV or on the radio or whatever, those people are jumping into the Valor platform and using that same expertise that they get paid big bucks to do. Now they're getting paid big tokens to do. Then utilizing cryptocurrencies as a ramp on for the Swiss-based safe haven investment environment. So this is a network effect type of thing. The more cryptocurrencies are used, the more Swiss regulations are going to continue to be invested in regulating and forward thinking. So keep feeding the beast so the beast will get bigger. Competitive positioning versus other projects that are doing the same stuff. They've got a unique application for their blockchain tech. They've got security expertise in crypto assets, and then regulatory and reputational advantage of Switzerland as their base of operations. Now, the strategic positioning of the Valor platform, you need to understand a little bit. We touched on this really early in the video here, but Switzerland as the legal jurisdiction and home base for the Valor platform is one of the top 5 banking centers worldwide. It's a leader in offshore wealth management, holds about a quarter of all global offshore assets, $4 trillion worth. I think everybody's pretty familiar with, you know, you hear about Swiss bank account. That's literally what they're talking about, is a Swiss bank account there. You know, if you have a lot of money, you might as well move some of it to Switzerland. Switzerland is an unchallenged position due to its political stability, its safe haven currency, because the Swiss franc does not move a lot. It doesn't inflate. The country is very careful and considerate with their currency, and it has an excellent reputation for doing so. Over the past 2 years, though, they've witnessed a sharp turn in the direction of regulatory policy concerning blockchains in Switzerland. The Swiss government made a decision to open regulations in order to propel Switzerland into becoming a global hub for crypto finance. The Swiss ex-president and current finance minister even proclaimed crypto nation Switzerland. That, again, was mentioned earlier in the white paper here. There's some more business here that's kind of refining and defining this stuff if you need more information about that, or you can just take that at my word there that the Swiss are pretty serious about their banking and their crypto banking. Now, this is just in their infograph showing some of the benefits of the platform versus a private bank, where things can be self-directed, decentralized, scalable, all that good stuff. If you want to take a pause and look at that, that's page 18. These are just some quick competitor analysis and the reasons why Valor's a little bit more different. So if this is a particular segment of the cryptoverse that you are super interested in, the securities exchanges, the tokenization of assets, whether you've been watching some of these tokenized real estate investment trusts, or there's a couple platforms that are trying to do security token platforming as the utility token for the US, European Union, stuff like that. There's a lot of different companies like that. If you're familiar with one of these like Polymath and why Valor's different, or LA Token, these are the reasons why. On this paper, we're going over Smart Valor, so I'm not going to jump into each and every one of these. There are a bunch, though. So some of these are exchanges, some of these are security platforms, some of these are major exchanges. So I'm just going to roll through these, though. You want to take some time, that is some informative reading, though, if you're not familiar with those companies. So, targeted segments and potential market sizes. I'm just going to roll over this real quick. Now, the audience they're looking for is traditional investors, so affluent to a lower high net worth, though. So these are investors, they're opening up access to crypto investments in a secure, compliant way for people that have money to invest, but maybe they're not $10 million they need to go put to work some kind of way, and they were looking at a private equity fund instead. These are people that have a couple $100,000 all the way up to that point can play now as well. And then crypto investors, people that want to invest and trade in security tokens and ICOs, but also be able to diversify into more stable alternatives, such as real estate and private equity. Part of the reason you're probably here watching this video or talking in Telegram channel is because you are a crypto investor. There are ICOs you're watching, and utility tokens are great. I love a good utility token, but a security token is the holy grail lately. Trying to find a regulatory compliant security token is a tough deal. So there are a lot of crypto investors that are just waiting to pounce on a solid, regulated security token. That's part of the market that they're trying to land here. And then the traditional investor segment, the analysis of regional distribution of wealth, shows that a majority opportunity for the revitalization of alternative investments lie in home markets such as the EU and Switzerland, where total wealth of 78 trillion is concentrated into segments of affluent and high net individuals. And this isn't just the EU and Switzerland, this is a lot of countries as well. But this is just a quick breakdown to kind of give you an idea of different countries and then where the total amount of wealth is at. So you got, Japan, North America, Europe, and Russia. You got most of the countries you're probably wondering about are in here, and then where their wealth brackets are broken down as well. So like how many people are in a particular wealth bracket. The 1 to 5 million wealth bracket is a big portion of the market that Valor's looking at accessing. So that's why you see the EU and Russia's on top there, 31%. Versus, you get down lower like Latin America, Brazil, stuff like that, where 1.5% is in that middle wealth. We're not talking about the 1%ers or the top 10%ers here. We're talking about that middle investors, ones that have some liquid capital, they're doing well, but they're looking to put their money to work, but they can't jump into a venture capital, venture or private equity fund right now. That's where we're looking to jump in and net those people for this particular platform. More infographics, more reasonings why. If you're unsure of why Valor would have enough market movement to be a worthy platform, you can take a few minutes and read that portion. Now we're getting into the revenue model, how the platform is going to sustain itself and generate revenue. Listing fees for initial placements on tokenization assets on the platform. So if you want to launch a security token through the Valor platform, there will be a listing fee. Transaction fees from accruing are just coming in from buying and selling transactions, that's gas. Custody fees for providing storage solutions for crypto assets. So if you have some cloud-based storage you'd like to run out to the platform, you can make a little money doing that. And then if you are Valor, you're the one saving that, so you're charging a fee for that web-based, cloud-based storage there. And then commissions on the provision of services delivered by the Valor platform partners, community contributors. So that's stuff like your KYCs, legal compliance, regulatory compliance. Those are going to be commissions that will be generating revenue for the platform as well. Distribution model, so how the platform is going to distribute tokens here. It's a model that consists of own and third-party channels. Own distribution channels, so those are distribution channels that are the Valor platform itself, the online marketplace, and then they're also going to be talking at conferences, roadshows, and events. This is not surprising. I'm sure you will see Medium articles and Twitters and stuff where they're out showcasing this platform. Now, third-party distribution channels, so this is other ways they're going to get the word out about the Valor platform. Banking institutions, independent wealth managers, and non-specialized marketplaces that are complementary regional footprints. So they're going to go out and have, if you go and talk to an independent wealth manager, you may have them bring up the Valor platform to you. They may start working with some banks where the bank may throw out there that, hey, as part of our services, we're going to mention that Valor platform's out there to get more people involved in the platform for adoption. Going to roll on the rest of here, go to regulatory approach. Again, this is pretty important stuff. There's a lot of legalese in here, but a defining competitive advantage of the Valor platform is the advantage that they're building a fully compliant and licensed platform for handling not just cryptocurrencies and utility tokens, but, and that's why it's bolded here, security tokens. An overwhelming number of crypto exchanges today are not licensed or licensed only in certain jurisdictions, putting participants and investors at greater risk. So if you have an exchange that's not licensed to deal with security tokens, you haven't passed KYC, and you're generating income on a particular security token, maybe you're not actually able to do that according to your country's regulations. That's where you can get yourself into some trouble there. Now we got some quick roadmap stuff. We're going to roll past all this here because this is a big white paper. We're going to try to keep this video fairly short. Implementation on roadmap and prototype. This is more stuff I'm going to roll over right now. If you want to take a few minutes, you can pause the video here. We're scrolling past page 29, 28 and 29 here. Jumping into the platform, though. They have a platform prototype that is functional. I've highlighted the demo web pages on here. This is a functional prototype that this was revealed in March of 2018 in London. There's a recording of the live demo. That's the first link there. And then the actual functional prototype can be accessed on the demo web link there as well. So if you want to tinker with it and take a look at how an investment search works or how it spells out investment details, you can go online and check this out right now. And you can look like you're an asset issuer, or you can look like you're a buyer, an investor. That's pretty neat that you can tinker with that right now. So tech behind the platform, they've designed a system that relies on the initial set of core functionalities and multiple connections to the ecosystem with the following philosophy: blockchain agnostic, internally and in terms of interfaces to external. So it's not tied to Ethereum or blockchain only. It's not just tied to Bitcoin. A hybrid approach to trading, centralized exchanges as well as decentralized trading. So you can trade peer-to-peer or you can buy off of the exchange proper. Open source for significant parts of development. So a lot of this stuff, if you want to see how they're coding their smart contracts, that's up on GitHub. Security driven, so that we're not leaking, we don't have a broken DAO go out on day one. Open APIs for third-party developers. So there's room for someone that wants to make a senior-friendly or millennial-friendly version of the trading platform. They can totally come in and build that interface that still uses the Valor platform. And then interfaces to data feeds, oracles, ecosystem participants, so that more data can be input. And then it's a community-oriented for both co-building and rewards. That's that value-driven economy we were talking about. Now we got layers here. This is just the different portions of the platform that are interacting. So you get the blockchain protocol, you have the core layer with the apps built on top of it, and then the additional third-party apps built on top of that going out to gateways. If you need more information about how the platform's operating, you can check that stuff out here. We're going to keep rolling, though. Now, some of the main components that are accessing those gateways: consortium and public blockchains. So certain circumstances require assets to be deployed on the Valor chain or another private blockchain, depending on what the issuance is from the issuer. So regulatory constraints might be the reason why it's on a private blockchain. In other instances, assets can be deployed on a public blockchain. It just depends. ICO platform for tokenization engine. So that's that portion where they're doing an initial coin offering instead of an IPO for a new company. They're trying to raise money. You have an app market for third parties to provide additional applications. A task marketplace, that's where if you're wanting to contribute expertise to the platform, that's where you would go to find a task that needs to be done. Governance and voting engine, if you have enough tokens staked in the platform, you're wanting to vote on particular portions, that's where that's at. Rewards and bounty programs, active stakeholders can earn rewards for participating in the Valor platform in a way that upholds what it stands for as secure and compliant. Examples of engagements are like polls, being involved in governance matters, giving input on new assets, all that type of stuff. That's where you're rewarded in tokens. A licensed exchange, secure custody for crypto assets, so that's your Valor wallets. Authentication and identity, that's your multi-factor authentication, that's your KYCs and your AMLs. Auctioning marketplace, a smart contract-enabled auction marketplace to facilitate price discovery and supports liquidity and infrequently traded assets for investors and issuers. And then you have the portfolio manager that's updating and reviewing your Valor investment portfolio. That's your dashboard that's available on mobile or desktop. That's where all that stuff that you're getting rewarded for expertise for doing, that's where it's being shown at the end of the day, is on the portfolio manager. All right, now we're going to roll past some of the security stuff here. We're going to hit the high points. It's fully aligned with a hybrid approach, continuously addressed through overall software security, organizational and risk management, and following other classical practices. They're implementing a specific measure dedicated to context, in particular the security of wallets and custody. That's who owns a particular token. Perfect security is not possible. They're working to improve system security month after month. An overview of main aspects is covered below. Details on some of these points are covered in ad hoc documents that will be released on the webpage. So if you're big on ICO security and blockchain security, and that's really the thing that gets you going, that's on their webpage right now. And then secure custody, wallet security, system security, smart contract security, which is a big one people roll over sometimes, strong authentication, blockchain security are all major elements they have considered and are covering. So, and these are security measures here. Again, we're just going to keep rolling over these right now. A lot of this stuff should be no surprise. Some of it's nice to see that they're spending as much time as they are on it. Now we're jumping into the Valor token itself. We've talked a lot about what you'll be able to do on the platform, but now we're getting into the uses for the utility token itself. So the purpose is to introduce a native currency, the Valor token, to be used on the Valor platform. No surprise, it's a utility token. All right. So in this business model, the Valor platform is engaging the wider community of investors and contributors, in which turn that enables faster scaling due to network effect. The platform's network effect incentivizes the users to contribute capital and work. Work is a big part here. And the faster the platform grows, the more the network effect takes over, the bigger the base will become. Contributors that join the Valor platform during pre-sale and token generation events, the more people you get in the initial user base, the quicker the network effect will grow it larger from there with platform adoption. So what they're shooting for is that circular token economy is what they're calling it. So participants can earn Valor tokens by contributing capital or work and then spend them accessing the platform. The circular nature of the exchange of Valor tokens between platform users combined with token staking should facilitate collaboration and reduce transaction costs, normally connected with service provisionings in an open marketplace. So it's utility token, gas should be paid off, and then the rest of it just keeps going around in a circle. Circular token model is set to enable decentralized value creation on the platform. A lot of classical investment banking functions such as due diligence, new asset management, and performance projections are highly labor-intensive activities. Introducing a token as an internal mechanism to engage a workforce of global experts creates a simple, automated way of ensuring high-quality standards. Here, a reputation can be earned, recorded, and the blockchain independently verified. The example, the process of listing a token will involve steps partially delivered through community and network partners. So it's not just you roll up to Valor, say I have a gold mine I'd like to tokenize, and they take it from there. Portions of this, the due diligence portions, are done by the community inside the platform, and then they're paid in tokens for doing so. Portions you can get paid in tokens for doing is sourcing a project, initial community votes on whether it should be selected to possibly be put on the platform, due diligence after it's been selected to put it on the platform, and then final listing decisions. All the due diligence has been done, it's been voted, and now it's up to the community to whether they're going to actually list it or not. That portion is central by a management team from Smart Valor who's legally responsible for the investment being offered on the platform. Now, utility-wise, it's an ERC20, ERC223 compliant token that can be transferred to external wallets. It's going to be issued by the company that owns the Smart Valor platform, Smart Valor AG. That's the one that's founded in Switzerland under Swiss regulatory laws, and it is a utility token that gives access to services on the Valor platform. Token also has some characteristics of a payment token, like the rewards portion, and because of payments for provisions of certain services provided by members on the platform. Valor tokens do not, however, qualify as a security because you don't get paid a monthly fee or whatever for your investment in Valor tokens. But it does exhibit the following functionalities. Member status, you can pay for services with it. Issuers and services can be providers, can stake tokens to be able to do those type of things. And then you can vote in community polling with the tokens. So advantages of holding the token. I always appreciate a white paper that does reasons to hold tokens versus reasons to pump and dump tokens. Advantages to holding Valor tokens for investors are participating in oversubscribed listings with early access. So if there is a particular listing for a security token or whatever asset on the Valor platform, and there are a ton of people that are interested in it, you get early access if you can stake enough tokens to do so. You can introduce co-investment opportunities like syndication rights and earn rewards. Syndication rights is an interesting idea that I wish that was in here a little bit more to speak on that. Get access to rewards for active participation in new listings or high trade volumes, so you can generate more tokens that way. You can participate in referral programs for introducing new investors to the platform. So if you're that wealth manager, that's one of the ways you can generate tokens for doing that. Access to free crypto asset custody services. That's what we were talking about earlier. Get free access to paid-only investment research. So if you're staking a certain number of tokens, you can get some of the subscription services for free. Then you can obtain platform services with significant discounts while paying with Valor tokens instead of, say, fiat or Ethereum or whatever. Now, assets of holding tokens if you are an asset issuer. So if you have something you want to turn into tokens, you want to tokenize something, why should you hold on or go out and buy Valor tokens? You get the benefits of priority listings during high load periods. So right after everyone's heard about Valor and then Valor goes to the moon, if there are a ton of people trying to get their particular projects listed on Valor, if you're already holding tokens, you get priority boarding onto the platform. You get access to qualified platform services such as legal advisors, marketers, negotiated package deals for like KYC and compliance lawyers. So that's another reason to stake tokens into that. Utilize promotional packages for online distribution. So to get your company, if it's an ICO or your asset you're tokenizing, out in front of more people. Valor can help you do that if you're staking tokens. You get preferred access to offline distribution platforms like pitching and exhibiting at conferences and private investor events that are sponsored by Valor. You can obtain product services at a significant discount while paying in Valor, like listing fees. If you pay them in Valor, it's cheaper than if you pay for them in fiat or standard crypto. And you can participate in the reward program for bringing in new investors through your listing. So if you have a particularly hot listing and you get a ton of new investors that are unique investors, you can get rewarded for that as well. So advantages of holding Valor tokens for individual contributors or service providers. So if you're going to contribute your expertise to the platform, why should you hold tokens instead of just being rewarded in tokens and then liquidating them? You can contribute your skills and expertise to earn rewards through building your publicly verifiable reputation. If you're holding tokens at that point, you can pay significant lower fees for using the platform, for listing your services or content or apps on the App Store. And then you can attract new clients to subscribe to your services, and you can get your listings higher if you're staking tokens on that. Now, TGE stuff here. If you're interested in the token sales stuff, this is what's going to be the most reported and repeated portions of this information that's going to be on Telegram constantly, is what the TGE deets are here. So the amount of tokens being created, how those are being allocated. 45% is the part that you're looking to hear about, is what's on sale in pre-sale in TGE. All this stuff here is your token sale specifics here, whether you can buy it in Ethereum, Bitcoin, francs, all that good stuff here. The amount is capped for each round. Something that is interesting in these portions here is the first round took place in 2017, and a boatload of Valor tokens have already been sold, but there is a 12-month vesting period on those. Token generation event, though, is expected to take place in the third quarter of 2018. Now, use of funds, this is where we get into stuff that's not everybody's favorite part to read in a paper. It is important, though, is just to see how much funding from the ICO is going to be vested into particular pieces. You definitely don't want to see salaries being a huge part in like the first year and then nothing in the last part. So it is good to take a few minutes and glance at this part. Everything looks to be in order, but read it for yourself here. Best practices, this is some of the same stuff we've already went over in the white paper, but I just want to hit it one more time. TGE is crafted with a goal in mind of best practices. We've achieved this through following the simple principles of a hard cap on funding. There is a hard cap. All contributors go through KYC according to Swiss compliance. No surprise there. Allocation to funding team, employees, and advisors is vested over a 3-year period, so they don't pump and dump. 6-month lockups and 12-month cliff periods. Funds raised will be held multi-sig addresses and third-party escrow. So it's not one wallet that everybody has access to. Financial statements will be certified by a public accountant and published on an annual basis. Quarterly performance updates will be provided to contributors and the wider community, because you want to have an update instead of, you do your ICO, you have your TGE, and then silence. That's not what you want to see. You want to have those quarterly performance reviews. So advantages of token-based participation. Token participation represents a non-dilutable participation in this project because it's a one-time token generation. In principle, it's similar to Bitcoin principle of limited indefinite token supply. Every contributor is a stakeholder if the network with clearly defined reward contribution rights is connected to the engagement on their platform, and it incentivizes contributors, developers, and founders is all aligned in the same direction. Contributors aren't pushing for one thing while founders are pushing for something else. All right, now we got leadership team, smart people. I always recommend you just check out their LinkedIn instead of their blurbs, though. Core team, same deal there. Advisors are always interesting to see who they've got working on a particular project. Again, check out their LinkedIn, and you can also check out their webpage for links to that stuff as well. And then the rest of this is risk factors, legalese, not an investment. You don't own shares in the platform. You've never invested in ICO before, do your research. That's what's all here till page 62. So that is Smart Valor. I appreciate you taking the time to make it through with me here on this particular ICO. If you have any questions or comments, please send them to me in the comments below. Thanks.